Welcome to Stock Incubator. Today we are breaking down the market question behind this story. Zensar Tech did not just announce one simple $400 million deal. That is the headline trap. The real number is a $401.8 million Q4 order book. And the actual AI-led framework deal is $210 million over 5.5 years. That difference matters. Because if viewers feel misled in the first minute, the video loses trust. So here is the real question. Is Zensar quietly becoming a serious AI-led IT services player, or is the market getting ahead of the proof?
The thumbnail leads with a big deal number. That gets attention. But finance viewers care about precision. So here is the truth check first. Zensar's Q4 FY26 bookings crossed the $400 million mark. More precisely, the company reported $401.8 million in order book. That is not one isolated contract. It is the total new business booked in the quarter. Inside that story, Zensar also secured a $210 million framework agreement with a large financial company. That is the real AI-led deal. Think of it like this. The order book is the big pipeline number. The framework deal is the specific customer catalyst. Revenue is what comes later, as work gets delivered. That is why this story is interesting. Not because the headline is perfect. Because the numbers create a real execution test.
When investors talk about Indian IT, they usually start with the giants. TCS, Infosys, HCL Tech, Wipro. Zensar does not usually lead that conversation. That is why the hidden angle works. But we should be honest about what Zensar is. It is not an AI chip company. It is not building the next ChatGPT. It is an IT services company. In plain English, big companies hire Zensar to modernize systems, automate work, build digital platforms, and improve technology operations. The AI story is not a flashy consumer app. It is enterprise work. Can Zensar use AI to help clients move faster, reduce manual processes, and improve productivity? That is the simple question. And now, the order book is large enough to make investors pay attention.
Let's slow down on the $400 million number. Zensar's Q4 order book was $401.8 million. That was up 122.9% quarter-over-quarter. Order book means new work booked. It does not all become sales tomorrow. It does not all become profit immediately. But it gives visibility. And visibility matters in IT services. Why? Because clients have been cautious. Some tech projects get delayed. Some budgets get cut. Some clients only approve spending that saves money quickly. So when a mid-cap IT company reports its strongest order book, the market has to ask a better question. Is demand coming back? Or did one large deal simply make one quarter look better? That is the first fork in the story. Now we get to the actual AI-led deal. Zensar secured a 5.5-year framework agreement. Expected revenue is $210 million. The client is described as a large financial company. In plain English, this means Zensar is expected to help that client change how work gets done across the enterprise. Less manual work. More automation. Better delivery. More efficient operations. This is important because financial companies often run on complex systems. Old workflows. High compliance needs. Many repeated checks. And a lot of back-office work. AI-led automation can help clean that up. But the key word is expected. This is not instant cash. The deal has to be delivered over time. That is why execution matters more than the headline.
There is a reason the financial services angle matters. Zensar reported banking and financial services growth of 12.5% year-over-year in Q4. That segment was one of the stronger pieces of the quarter. Now connect the dots carefully. The large framework deal is also with a financial company. That does not prove a new trend by itself. But it gives the market a pattern to watch. Is Zensar becoming stronger in banking technology transformation? Can it win more AI-led automation work from financial clients? Can it turn one large win into a repeatable playbook? That is the bull case question. The simple version is this. Banks and financial firms want efficiency. Zensar says it has AI-led tools to help deliver that efficiency. Now investors need to see whether more clients sign up.
Now let's keep the hype under control. For FY26, Zensar reported revenue of $643.7 million. That was up 3.1% in reported currency. In Indian rupees, revenue grew 7.7%. That is solid. But it is not explosive. Q4 revenue was $158.4 million. That was up only 1% year-over-year in reported currency. And it was down 1.3% quarter-over-quarter. Here is the simple translation. The order book looks strong. The AI deal looks important. But the revenue engine has not clearly accelerated yet. That is the gap. Order book is promise. Revenue is proof. The next few quarters need to close that gap.
Zensar also has a balance sheet point worth watching. The company reported $319.5 million in net cash and cash equivalents at the end of Q4. In plain English, that is financial breathing room. It gives the company flexibility to invest in AI capabilities, flexibility to support delivery, flexibility to handle slower client spending, and flexibility to look at strategic options. But cash is not a thesis by itself. Cash only matters if management uses it well. That means better capabilities, better execution, better client wins, better margins. So the cash number supports the story. It does not finish the story. The market still needs proof that this financial cushion can turn into stronger growth.
Now comes the quality check. Margins. Zensar reported Q4 EBITDA at 16.1%. Profit after tax was 14.4% of revenue. Here is the simple version. Revenue tells you how much business comes in. Margins tell you how much of that business the company keeps. This matters because large transformation deals can be expensive to deliver. They can require more people, more transition work, more training, more tools, more upfront cost. So the right question is not only whether Zensar can win large AI-led deals. The better question is whether it can deliver those deals profitably. If margins hold, the bull case improves. If margins fall, investors may worry that growth is being bought at the cost of profitability. That is the margin test. Management also said 85% of the workforce is AI certified. That sounds impressive. But let's translate it. It means Zensar is training its people to use AI inside delivery, coding, testing, automation, data work, process redesign, quality checks. That is useful. But it is not proof by itself. Every IT company is talking about AI now. So the market needs more than certificates. It needs client wins, revenue conversion, productivity gains, stable margins, and stronger delivery proof. The bullish read is that Zensar is preparing its workforce for the next version of IT services. The cautious read is that certification is only the starting point. Execution is the scoreboard.
Is simple. Zensar is no longer just asking investors to believe in a turnaround. It now has a record order book. It has a large AI-led financial services framework deal. It has a strong cash position. It has stable margins. And it has a stronger BFSI signal. Put together, that makes the story more credible. Not complete. More credible. Here is the plain English version. A mid-cap IT company just showed investors that clients are still willing to sign meaningful work with it. That matters in a slow tech spending environment. If Zensar converts this order book into revenue, protects margins, and wins more AI-led deals, the market may start viewing it differently. That is the constructive case.
Is also serious. Revenue growth is still modest. Q4 revenue did not indicate a clean acceleration. Some business areas remain weak. The US region declined 2.2% year-over-year in reported currency. Telecommunication, media and technology declined 16% year-over-year. That matters. Because one strong order book quarter does not erase weak pockets. In plain English, the business still has pressure points. So investors should not treat the $400 million number as the whole answer. It is a positive signal. But it is not final proof. The bear case says Zensar still needs stronger, broader, and more consistent revenue growth. That is fair.
There is also an M&A angle. Reports said Zensar was in talks to acquire an 18 to 20% promoter stake in Mastek. The reported transaction value was above $200 million and could potentially reach $400 million. But this needs careful language. Reported talks are not a completed deal. No final deal means this should not be the foundation of the thesis. So why mention it? Because it tells us what the market is watching. Scale, capabilities, UK exposure, and possible consolidation in mid-cap IT. If Zensar uses its cash position and operating discipline to add scale, the story could become broader. But until something is confirmed, M&A stays a side plot. The core proof is still order book, revenue, margins, and execution.
Here is the watch list. First, order book. Was $401.8 million a one-quarter spike? Or the start of stronger bookings? Second, the $210 million framework deal. Does it convert into steady revenue? Third, margins. Does AI-led work protect profitability or pressure delivery costs? Fourth, BFSI. Does banking and financial services keep growing? Fifth, weak segments. Can Zensar stabilize TMT and the US region? And sixth, management language. Specific client wins matter. Generic AI language does not. That is the filter. If the next few quarters bring revenue conversion and margin discipline, the story gets stronger. If not, the headline may have moved faster than the fundamentals. So let's return to the title. The hidden AI giant? That is a question, not a conclusion. Zensar is not yet an AI giant in the way most people use that phrase. It is an IT services company trying to become more relevant in AI-led enterprise transformation. The $400 million number is not one single deal. It is the record Q4 order book. The actual AI-led framework deal is $210 million over 5.5 years. That is the honest version. And honestly, it is still interesting. Because the market does not need a perfect story. It needs a story with enough proof to keep improving. Zensar has started to build that proof. Now it needs to repeat it.
The final read is this. Zensar Tech has earned a closer look. Not because the title alone proves anything. Not because one number changes the whole company overnight. But because the pieces are lining up in a way investors can track. Record order book. A large AI-led framework deal. Solid cash. Stable margins. BFSI momentum. And a clear execution test ahead. The risk is also clear. Revenue growth must catch up. Weak segments need to stabilize. And AI language must keep turning into real client work. That is the balanced setup. For educational and informational purposes only. If this breakdown helped, subscribe to Stock Incubator and comment which Indian mid-cap stock we should break down next.